Objective to disconnect over 150 non-deposit financial platforms from the banking system is generating ripples, with fears that it may lead to major disruptions in the financial system. AIT's news correspondent Lanre Babalola explains that what this means is to the payment platform and how you may be affected.
For some time now, you may have become used to accessing money, whether it's withdrawing cash or making payment without necessarily going to your bank. That is because you are using a payment platform that involves walking up to a roadside POS vendor. Records indicate that there are about 250 of such operators. Most of them do not have banks, so they only operate by being linked or switched onto deposit financial institutions. So, when the Nigeria Interbank Settlement System (NIBSS) issued a directive to disconnect switches payment and super agents from the NIBSS platform, which makes payment possible, it created a bit of shockwaves, not just for operators, but for the public. The circular, which was dated Tuesday, December 5, 2023, got many worried that mobile money operators, MMOs, such as OPay, PalmPay, and others are part of the financial technology firm affected by the directive. But that may not exactly be the case.
To restate circulars and rules that had been in existence before now. There was one in 2014 and another in 2018, clearly stating the permissible businesses that each of the licenses could operate.
What CBN actually tried to do is to protect people and also to protect the system. Because if you want the license to hold deposit, you go get it. A microfinance bank license enables you to hold deposit. A deposit money bank license enables you to hold deposit.
For clarity, the directive affects 47 companies which were issued licenses by the CBN to operate as super agents and 75 firms authorized to function as payment service solution providers, PSSPS, and 16 fintechs with a switching and processing license.
The traditional deposit money banks, the microfinance banks, these are banks that have NDIC insurance. What it means is that for you to hold customers' deposits, you must have NDIC insuring those funds. So we now have a situation where we have some of these fintechs that cleverly acquired several of these licenses.
And all of this is in essence also to checkmate all of the activities that are happening, in the industry today, which I think is very, very good for us, the practitioners. As long as you understand the market, the industry, you play based on the rules of engagement. While
the insinuation persists that fintechs may be posing a threat to BNBs, there is also the potent problem of fraudulent activities carried out on some of these platforms. The plus side to it, according to experts, is the opportunity this platform provides for financial inclusion for the most vulnerable.
People use them, open accounts online, and then they defraud people. So it's difficult, to track those people because proper KYCs are not done. For deposit money banks or banks that are insured by NDIC, proper KYCs are done on the account owners.
They have to use the bank infrastructure, which means they are using the bank's either virtual accounts, right, or an account-based system to carry out transactions.
The rate at which gender-based violence is spreading in Kano, Jigawa, Katsina, Sokoto, Zamfara, and Kebbi states is alarming, and the majority